the gross refining margin at $10.4 per barrel. Wow, that is where the number beat is coming from. That is where the big beat on the refining number is coming from. Keep in mind the expectation was $9.5, and why is that important? Because if you compare it to the Singapore gross refining margins have actually fallen from 8.6 to $8. Reliance last quarter had done $10.1, and in an environment where the Singapore GRM has fallen by about half a dollar, the Reliance's GRM has actually gone up to $10.4 per barrel. Devin Choksi is also with us along with Mayuresh Joshi. Devin, good evening. First word on the numbers?
Yeah, no, good evening. Well, of course, I think as I said in the morning today on the show, that I was expecting, I think, a good case scenario, I think somewhere around $10.1 kind of a GRM margin. And to my pleasant surprise, I think it is even come better than that. So certainly I think these numbers are backed by a very robust GRM margin that has come up. And I need to get the details, I think, from the company on, I think, what kind of distillate cracks that they have got. But I do believe that I think the crack should be in favor of, I think, the diesel as a fuel, I think, which probably has ended up fetching them better kind of a realization. So certainly I think till the time I get the more details in my head, but I believe that I think the GRMs have definitely led the show as far as the margins are concerned.
Oh yes, this really is the story of the day. In fact, Mayuresh, good evening. $10.4 GRM. Street was expecting $9.5. Do you think the stock has a big opening Monday morning?
It would, Anuj, clearly, because I think the expectation on the street was anywhere between 9.4 to 9.6. Our own expectations were close to 9.6. And as Devin was mentioning, the gasoline cracks, which were expected to be higher, 32 quarter high, I think that has definitely come through as a very pleasant surprise. The weak rupee aiding margins. But clearly, I think 10.4 by no way of imagination would the street be expecting this. So I think it's been a big beat as far as the refining business is concerned, and specifically the GRMs which have come out. So yes, I think it will be a positive opening for Reliance. Comes to the GRM margins for the next 2 quarters. But clearly what the management here say comes through, specifically in terms of how they are expecting GRMs to pan out, will be key for the stock going forward. So I think very pertinent to know what management has to say about...
Okay, so let's do one thing, and Devin, since you also wanted to hear this out, let's just give some details on where this GRM performance is coming from, or where, more importantly, this refining performance is coming from. So $10.4 per barrel compared to $10.1 quarter on quarter. The production has gone up from 16.2 to 16.6, and the gasoline cracks was significantly higher at $19.8 compared to $15.4 in Q4. So that's the sense you get, Devin, that this was mainly on account of gasoline, and that's also because of US, China, and most importantly India, where it's gone up by 12%.
Yes, I think absolutely. I think you summarized it all actually, Anuj. I believe that I think the going forward as well, I think they have little bit favorable situation given the kind of flexibility that they have, I think, for shifting the production, and with the falling crude oil prices, to a greater extent I believe that I think the comfort is on their side. So certainly I would like to believe that I think the performance going forward on the GRM side will remain. I'm not sure, I think, whether it would be same numbers, I think, quarter after quarter, because it's a function of market, but would remain largely on the higher side compared to the average GRMs.
Okay, Prakash, do you get a sense that this GRM could be a one-off? It's being led by big jump in gasoline. That doesn't look like it's sustainable.
No, I mean, the idea is how much differential you can create the Singapore GRMs in terms of, and that is what creates the alpha for this company. They've, repeatedly, consistently shown the ability to not only increase volumes favorably, get the right distillate mix, make it profitable. And what else would investors need? The idea is to have an investment into a company that delivers consistently on some or the other ground and make sure that your money is justified, your price is justified. And there you have more than that. So even if the absolute range of the GRMs is probably softens a bit, which it could, I am not worried. I'm sure they would be able to manage to get decent EBIT level performance, and it could be through increase in volumes, if not only GRMs. And that's what I would bet on. So very clearly, this is for me a great confidence boosting parameter, that 1,500 crores changes the way you could look at the stock even at these heightened levels which people were getting worried about.
Okay, I'll just make a correction for Petchem. Our expectation was 2400 crores. They have delivered 2338 crores. So Petchem actually is not ahead of estimate. Petchem is actually below estimate by 75 crores thereabouts. Though the Petchem margin has gone up from 9.2% to 11.2%. So that's the word as far as the Petchem business is concerned. Anything else, Rima?
Well, I just had one question, on the Petchem side. Well, Petchem may have missed our expectations by about 70 odd crores. You would largely say that they've delivered in this quarter. And this is compared to a GAIL where the Petchem business was a big drag. So, my question, Prakash.
Before that, you can't compare GAIL and Reliance because working in two different, ownership. One is a private sector company, one is a PSU company. So the level of efficiency is different. But yes, the expert would be the better to answer that.
Yeah. So Prakash, what explains this difference in Petchem performance that we've seen from two companies?
Well, one is of course the sheer strength of private enterprise backing this business up, and as Anuj said. But the other thing is, this is a company which only improving on its efficiencies through different improvement in technology, and of course the kind of sourcing of input side resources that they have is phenomenal. So I don't think anybody can match that. In fact it's of global standards. And when we are talking about Petchem having missed out on from expectations, but remember it's still better than the 2120 crores we saw last quarter, and in this environment, competitive environment, to increase that also by about 200 crores is not at all a bad feat.
Okay, oil and gas, we've seen a big decline in the margins, yes, on expected lines, but they would it be a big drag going forward?
Not really. I think on the overall contribution of the Reliance's performance, I don't think that the oil and gas is making very significant amount of contribution any which way. So to a greater extent, I don't call it a drag at this point of time. On the contrary, I think as I was making a point earlier that in the current year, as you see expansion of capacities getting completed in case of Petchem particularly, I think there with a higher output, I think you would be seeing the kind of an organic growth coming into the books of the company. And going forward in the next financial year when the feedstock changes, I think that should substantially save onto the cost of raw materials. So to a greater extent, I think it should add up to the margin going forward. So I am relatively more positive about the things coming up going forward. However, I think as earlier also I was making a point that in a complex situation like this, I think it would not be very fair to predict the numbers on a quarter-over-quarter basis. But certainly, if one looks at the average basket of the crude oil for the current financial year, then one would remain pretty confident about the company delivering better performance by the end of the year. So I'm not too sure about the quarter-over-quarter basis.
Okay, shale gas has been disappointing. Of course, keep in mind that these numbers, the shale gas numbers, are consolidated with a lag of 1 quarter. So with that lag, the quarter-on-quarter change was from positive 336 crore that it would have added to consolidated numbers, minus 49 crores this time around. So of course, we all know what's happening in the shale business. But a word on organized retail, and what clearly stands out is the quarter-on-quarter number. They have maintained that from 104 crore. It's now gone up to 111 crore. Not too much of an improvement, but at least they have maintained that number. So Mayuresh, a word on both these businesses, organized retail and also shale gas?
So clearly, I think organized retail is picking up mass for Reliance as a whole. For better part of FY15, they produced 17,500 crores in terms of revenues, which was quite substantial. And the roadmap, as far as their plans laid out in the AGM, is to increase the number of retail outlets, increase the number of locations, and even on the e-commerce side. So yes, I think though it's a minuscule and a small part of the overall business for Reliance, I think it is gaining mass. And clearly, I think it will contribute, but not meaningfully. So I think I'm not too concerned about how that business is shaping up. That business is shaping up quite decently. When it comes to shale, I think yes, I think it comes out with a quarter's lag effect, And clearly, I think the management is also very clear on that front, that they are cutting down on operating costs by 30 to 40%, which will ensure that they do not have deep gashes onto their business going forward as well, if one really assumes that energy and crude prices stay at the level that we assume they would. And similarly on the E&P side of business, as Devin was mentioning, I think the E&P business is not that much of a contributor to Reliance at this point of time. And though I think the returns on investments are much below the cost of capital, I think Mr. Ambani probably realizes that the main two key drivers are his refining and petchem. That is where his focus has been. And again, telecom, I think the kind of capex that has gone on the telecom vertical, I think one really needs to understand what the plans are, how he's going to come through with that. He's made very ambitious statements in terms of mobile ARPUs, in terms of data ARPUs going forward, in terms of handsets being valued at 4,000 rupees. How he's going to tap that market is going to also be very essential, because the overall consolidated ROEs for the entire business, including telecom, from FY18 onwards will determine what the course of action that Mr. Ambani takes over the next few months.
Okay, well, as a matter of disclosure, let's just also say that Reliance owns both TV18 and Network 18, and the channel that you're watching, CNBC TV18, is part of that network. And also, as a further disclosure, in these consolidated numbers, they've also included the numbers from Network 18. Now, very small in the entire scheme of things, but as a fair matter of disclosure, that's something that you would like to make, that the consolidated numbers also include the numbers from Network 18. So, Devin, is it fair to assume that with the kind of run that we have already seen on the stock, and this 10.4 frankly appearing a bit of a one-off, the stock may not have too much of an upside on Monday morning?
Well, I think I would probably look at it other way around. If you look at, I think in all subsequent or all earlier quarters, I think the other income part of it which they have earned from treasury operations, the market has never liked, I think, the company producing more treasury income vis-a-vis the operational income. In this particular quarter, the company has ended up producing higher amount of operational income and lower amount of treasury income. So to a greater extent, I think that should give the confidence to the market, I think, from perspective of looking at the numbers going forward. The second part is that I think they have rightfully so accounted for the higher amount of interest that they have expanded because of, I think, the various other projects which are also going on, and I think lower treasury income which is basically getting reported. To my mind, as I was making a point from the gasoline cracks, I think you are having better amount of margin, and it is likely to have, the Reliance is likely to have the lead on the Singapore GRM for sure, I think, in subsequent part of the year as well. So I'm not saying that the market will give a thumbs down to this part of it, but I would rather think that I think those people who entered into the market only for the trading purpose, I think they may do whatever they want to do, but those who want to buy for investment purpose, I think they may see this as an opportunity going forward if the stock price comes down.
Okay, Rima, just a word before that. The other income has fallen from 2133 crores to 1818 crore. That's actually again a number which the street will like, because that would tell you that operationally the number is a bit better. So let's do one thing. Suffice to say that these numbers are actually a beat on estimate. Operationally, these numbers, Rima, are a beat on estimate. My sense is that you should see a bit of an upgrade on the numbers, especially on the refining front, because the most bullish estimates on refining would have put the number somewhere around 4800, 4900 crores. 4730 crores is what they had delivered in last quarter, and this number is a clear beat on that. That's the sense that you get when you look at these numbers.
But the other question is, with the kind of run-up that it's already seen, with the stock sustaining above 1,000 rupees, per share for the last many days now, how much of it is already priced in, especially when you're not even convinced that these GRMs are sustainable?
Indeed. So I think that's the whole point, and that's what I asked Devin as well. These numbers are a beat on street estimates, but the point is how much of it is already factored in. The stock has seen quite a bit of rally. It's trading at 52-week highs. I mean, of course, today it was down about 2%, but based on these numbers, it will be interesting to see if there can be any kind of re-rating from here on. Mayuresh, what's your sense? What would be your near-term and medium-term price targets on Reliance?
So again, I think structurally we remain extremely positive on Reliance with a couple of years time horizon, more to do with the kind of capacities that are expected to come through the the petcoke gasification expected in the fourth quarter at 516. That will add significantly to earnings going forward. And though we've seen or heard a 6-month delay on the off-gas cracker, I think the GRMs are sustainable, and that's what I'm interested in hearing, as I said at the beginning of the conversation, between 9.5 to 10 for the greater part of this year, assuming gasoline cracks stay at those elevated levels. I think you will see change in estimates going through. So yes, I think at least from an FY16 perspective, we're still maintaining a cumulative rating on the stock. Our target price still remains the same at 1100 rupees.
Okay. So Devi, Mayuresh believes that GRMs of $9.5 to $10 per barrel for the entire year will be a positive. What is your in-house estimate of what the GRMs would be on an average for FY16? What you penciled in into your numbers?
Well, Rima, I think as I was making a point, I think difficult to predict, I think the GRMs on a regular basis till the time I think we see the crude oil price movement and till the time I think we see what distillate they process. So I would refrain from giving any kind of a direction on this part. Maybe I think the best people to ask for this direction would be the company at the operating level. They would probably I think have fairer idea about I think what exactly they see. But I would like to put across a point here that even if we assume that I think the GRM stays in the vicinity of somewhere around 9.8 dollar kind of a thing at the end of the year, still the company would have I think a decent amount of headway up I think as far as the operations are concerned from the refining segment. In this quarter the refinery has produced at 107% utilization. So certainly I think on one side you have got a higher amount of utilization, on the other side sustainable level of GRMs could probably produce numbers. It is easy for anybody to calculate I think the profit numbers. I think every 10 bips change in the GRM is 100 crore worth of impact on EBITDA level. So if you keep this particular calculation in mind, according to me I think you would not be getting any kind of surprise beyond the point once you start receiving the numbers I think on a quarter-over-quarter basis for the company.
Okay, Mayuresh, the other point is that what's happening to the Singapore GRM in the month of July. I believe it's already down to $6 per barrel. Do you think that would be a bit of a headwind going forward, regardless of how much better their margins are over Singapore? If that falls to $6, would that be a bit of a headwind?
No, that would, and that's what I exactly want to understand on how they are perceiving the GRMs to pan out, specifically on the Singapore GRM side. And clearly it's a combination of a lot of factors, how the naphtha spreads are panning out, how gasoline cracks are expected to pan out. So there are a lot of variables here at play, and even how the rupee behaves against the dollar, even that is going to be a key variable going forward. And one really can't make simple assumptions on this case. So one really needs to understand what kinds of holistic assumptions the management has made probably in regards to all this. And that's the whole point. I think really need to understand whether these margins are sustainable, and if the management is hopeful, I think you might see estimates or earnings getting changed and revised.
Mayuresh, we're also, there's another statement that Reliance Holding US has gotten into a pact to sell 49.9%, the entire 49.9% stake in EFS Midstream. What is this? Are you aware of it, and would it be significant?
Not really, Rima. So I think we need to look at the finer details on what they're trying to indicate here.
Okay. Are you penciling anything at all in terms of contribution from RelGeo in FY17, which will be the first full year of commercial operations?
So clearly I think very difficult to pencil in numbers, and we're not doing anything in terms of how the telecom business will behave from FY17. Though I think one really needs to understand that it takes at least 2-3 years after the start of operations, and you've seen that with major telecom companies as well, like the Idea, when they started off their operations, that it takes a gestation period which is quite significant. So I think one really needs to understand the kind of time limits Reliance Jio will take post his full launch of operations. But clearly we're not penciling in any numbers specifically from an FY17 perspective, at least at this point of time.
Alright, Prakash is back with us, this time in our studios. Had a bit of a vehicle problem, Prakash, but I just want to understand one more time this gross refining margin. Okay, we are now looking at the rear mirror and it's looking good, but July hasn't been good so far, only $6 per Singapore GRM. Does that limit any kind of upside on the stock?
I look at it slightly differently. I know what you're trying to figure out, whether this is a one-off and people would kind of start getting disappointed with the way the price is already appreciated so much. But my sense is it gives ample reason for no disappointment to happen, which means the price continues to be where it is. In fact, the under ownership of Reliance is what I am very interested in. None of the institutions own Reliance to the extent the weightage is increased. So if they were to benchmark themselves with whether it's Nifty, MSCI, whatever, it's going to be a significant addition to the stock that they'll have to make, and that means the demand for the stock at even these heightened levels is going to be much more. And what the numbers tell you is don't expect any selling. So very clearly, the demand-supply equation is getting much more favorable. You will have to buy Reliance and add a premium to what it was trading on Friday evening. So very clearly the price has to go up and just doesn't come down.
Do you think this is the quarter when investors say that, yes, we're going to start investing in Reliance Industries, the capex is done, and the earnings have started improving? Is this the quarter?
Yeah, so the only question that people might have, as Anuj is pointing out repeatedly, is whether that statement that the earnings have started improving is consistent enough.
So will you wait for another quarter to see the consistency, or would you say that you take the leap of faith and do it now?
No, absolutely. If you haven't done it at 850 and 900, you're better off doing it at closer to 11 rather than doing it at 1200 plus, because the stock's trajectory is very clearly up. The positive news flow that come through as headwinds, there's nothing negative on the headwinds. Even if refining margins were to come down, let's say, and I understand 10.4 is way off from the expectation in this market environment. So even if it comes down to, let's say, the early 9s, it's not going to be such a disappointment.
Okay, so let's just do a bit of a recap of the numbers, and I say this with a fair degree of responsibility that the Reliance numbers for this quarter have beaten street estimates. The operational numbers have beaten street estimates. So what you're seeing in terms of the absolute net profit in line with the estimate is because the other income has fallen way short of estimates. The refining performance, which is something that the street always looks up to, for this quarter at least, you could argue that going forward it could deteriorate, but at least for this quarter, the quarter gone by, $10.4 per barrel is something that no analyst would have worked with, and my sense is that that's the number that the street should like, although with the caveat that the July GRM is at $6 on Singapore, so the sustainability of these GRMs would be always in question. So that's something that we would like to state categorically as far as Reliance is concerned, and we would like to thank our guests, Prakash, Mayuresh, Devin, thanks a lot for your time. And before we wind down, the mandatory disclaimer again, Reliance owns TV 18 and Network 18, the company that operate CNBC TV 18, the channel that you're watching.